Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, August 26th, 2020, and I am pre-recording this Trading Places Live for Thursday, August 27th. I'm going to get into the agenda in just a moment. Actually, why don't we just go through that agenda really quickly? I'm going to start off with the daily market recap, talk about what happened on Wednesday. Get into talking technically. I want to go through a couple of groups. One, software, had a huge day on Wednesday, and then the other, biotechs, which I think could be setting up for a big day and a big rally coming up, but I'll go into that in just a bit. Then I'm going to go into accumulation distribution. I'm going to focus on that biotech group and show you some of the reasons why I think the biotechs could be poised for a rally. Then get into earnings spotlight, number of companies reporting after the bell this evening. We'll take a look at how they're reacting. And then we'll wrap the show up with the three you must see. Let's see. Let's go ahead. Before we get into any of that, let's take a look at the earningsbeats.com site. I just want to point you over to our free Earnings Beats Digest newsletter. It comes out Mondays, Wednesdays, and Fridays. It's free, no credit card required. You can unsubscribe at any time. Simply type in your name, email address, and hit that subscribe button, and you'll be good to go. I usually post usually a chart, an individual stock chart showing relative strength. Maybe it's a stock that's recently beaten its earnings expectations. We're looking for key support. In addition to these articles being educational, I think you'll also find them to be of great value in terms of trading. A lot of these will set up for possible trades. And so love for you to come on board, join our Earnings Beats community, and sign up for our Earnings Beats Digest newsletter. Again, just a name, email address, hit the subscribe, and you're good to go. All right, let's jump into the daily market recap for Wednesday. And taking a look at what happened here, I mean, overall, the market did very well. You can see the Dow Jones up another 83 points, well above 28,000 now. The S&P 500 took us a while to get back up to that all-time high and get through 3386, which was that high close back in February. But since getting through, it's been a pretty quick 100 points tacked on, and now the S&P 500 approaching 3,500 as it just continues this push to the upside, just a relentless move to the upside. NASDAQ is the leader, continues undisputed to the upside, up almost 200 points on the NASDAQ on Wednesday. And, you know, we were just going through 11,000 to open August, and now here we are on the upper half of the 11,000s, not far away from 12,000. So another big move on the NASDAQ as we continue to tack on more and more gains. Mid caps finished down, small caps finished down. This, once again, was not a market rally that included everyone or every area. It was very specific, targeted many of those growth companies that have done extremely well since the March low. Those were once again in favor on Wednesday. As far as the sectors go, communication services, big move there. Internet stocks continue to lead the advance in that area. Technology, huge move, gaining more than 2% today. Software, as I mentioned, big move higher on a couple of key earnings reports. Materials also did well, trying to make a breakout here above the highs established earlier in August. And then consumer discretionary, once again, another relentless pursuit of higher prices as the XLY just continues moving higher. The loser, the laggard on Wednesday, I hate to be a broken record, but this is almost every day, it seems. Energy down more than 2%. So we saw the growth areas moving up, but that bid is not finding its way into energy stocks. Energy stocks down more than 2%, back to 35.73 on the XLE. Really needs to hold. I mean, 34.35 is pretty good support. We're back into the 35s now. We're below the key moving averages. Energy really needs to hold. I think in a bull market, a secular bull market, I believe we will hold it. And I think eventually we'll turn higher. But on a relative basis, energy has clearly been the worst area of the market. Moving on to the 10-year Treasury yield. 10-year Treasury yield gapped up. We had a strong durable goods report early on Wednesday that led to a little bit of a move up in the 10-year Treasury yield as the Treasury sold off. But we saw a reversal in the bond market. So 10-year Treasury yield, which was up at about 0.72 at the open, fell back and finished below 0.69. So while there was a lot of folks moving out of bonds at the open, we saw a lot of people moving back in throughout the day, and that brought the yield back down. Still, I'm looking at this pretty bullishly. We've now got to move up, a pullback to test the 20 and 50-day moving averages, and then just this recent strength the last couple of days back up near the recent highs. You can now see over the last 8 weeks or so, we've had multiple tests trying to get through this 0.72, 0.73% area. If we were to break out to the upside, I think that would be very bullish for equities in the US, as that would just key further rotation out of treasuries and into equities. Let's move on to talking technically. I wanted to first just show you the move in software. So software had been consolidating, and this was a group that on a relative basis, I was kind of watching. I'll show you the relative chart that I use, relative strength industries. And let me pull this software chart up for you, because I pointed this out recently. We went down and tested that 20-day moving average, 20-week moving average, and bounced off of it. This is the relative strength of software relative to the S&P 500, that is. And after moving back down and testing that rising relative 20-week moving average, you can see we've had a few of those the last few years. Saw a couple back at the end of 2017, got close at the end of 2018, and actually for a couple of months went a little bit below that 20-week moving average in 2019, September and October, when we paused for a little bit. But we have yet to lose that 50-week moving average, and we've continued just to push higher and higher. But last week, or maybe a couple weeks ago, we got very close to going below that 20-week moving average. We held it, bounced, and now you can kind of see what happens as we turn back to the upside. Software leads. Software making a huge breakout here on Wednesday, clearing the tops that we saw back in July, again in August. I see a little bit of a rising low, equal high, an ascending triangle type of pattern, which is very bullish. It's a bullish continuation pattern. And as we break out and set a new high, notice the accumulation distribution did the exact same thing. And while we consolidated, the PPO went back very close to the center line, is now just starting to turn back up again. So this whole configuration to me is very bullish. But I want to turn my attention now to biotechs, because biotechs have struggled. They haven't just consolidated, they've been downtrending. Let's look at this daily chart. This is the Dow Jones US Biotechnology Index. And the group looked incredibly strong in mid-July. But since then, we were up over 2,600. Earlier this week, back on Monday, we went back close to 2,300. We were down almost 300 points in a month, a little over a month, maybe 5 weeks. That's about 11, 12% in a fairly short period of time. Now, you do have to understand, biotechs are extremely volatile, but I believe they're going to go higher. I think that this is a period of consolidation. We saw more sideways consolidation back in May and June before making the breakout. This is more of a downtrend on the daily chart, which is maybe a little bit more bearish, but I would say that only from a daily perspective. One thing I am going to point out, as prices have continued going lower, and we've been almost unabated to the downside for the last 5 weeks, check out the AD line. AD line is actually starting to turn back up and is not far from a 52-week high. Very unusual with price action falling like this to see the AD line actually starting to turn back up again. And I'm going to have more to say about that when we get into the accumulation distribution in just a minute. But the main thing I wanted to point out here is this move down on the daily chart, where we've been testing that declining 20-day moving average, have not been able to get through it. I think we're going to get through it, though. I'm also going to show you, let's go to the hourly, and then I'll go further out and show you the weekly. But when you look at the hourly, you can see that at the end of the day, we did finally climb back up above the center line. So at least on an hourly chart, we're beginning to show a little bit of bullish momentum. Now, we saw that back here in August, well, mid-August, I should say. we had a very strong hourly PPO, and it didn't last. We rolled back right back over. Also, back at the beginning of August, you can see we went positive very briefly and rolled back over. So there's certainly the chance that this is nothing more than what those two were, which was just a little bit of a relief rally back to the upside, and maybe we're going to turn around and go lower. But I'd be a little careful with that thinking for a couple of reasons. The first reason I'm going to give you is the weekly chart. Now, when I'm looking at charts, hourly is one thing. I think daily chart makes a little bit more sense to follow than the hourly in terms of big picture, but the weekly is bigger than the daily. And if you look back over the last 5 years, you can see we had a pretty big breakout. We'd gone sideways. We'd gotten a pretty big breakout between 2,200 and 2,300. If I take this back even further, if we go back 10 years, you're going to see that this 2,200 level right here, 22, maybe 2,280 right there, 2,200 here, 2,200 here. We finally made this breakout. So we were just breaking out of a very lengthy 5-year consolidation period. We went straight up, PPO looked great, and we've come down. And what we're doing here right now, I think, is just simply testing the 20-week moving average. And if I'm right and we hold here, look at what happened when we trended before to the upside. Do you see all these 20-week tests? And what happened after every one of them? Big rally here, big rally here, big rally. Finally, we had a negative divergence over here, went back, hit the 50-week moving average, and then we started it all over again. This is kind of what the long-term tends to look like. So if we're just starting this move to the upside, this could be our first really good opportunity to get into biotechs at that 20-week EMA. So I'm going to start off this next section, accumulation distribution, with just that thought that biotechs from a weekly perspective are at a level where we absolutely could see another run. So keep that in mind. Now let's take a look. I'm going to show you the IBB, and I want to show you the IBB, which is an ETF that tracks the biotechs. I'm going to show it to you on a couple of different levels. I'm going to start off with this daily chart. And when you look at the daily chart, it's very similar to the biotech index I showed you. Pulls back, fails at the 20-day moving average, keeps moving lower. But similar to the biotech, we do have the AD line starting to turn back to the upside. So I think that's very bullish. When we saw the selling back in March, we put in these new lows. Look at the AD line. AD line never went down. And what happened as a result? Price action came right back up, came soaring back up. And we just continued as we moved higher, putting in new highs. When we got to that high on July 20th, we had a new high in the AD. And as we've started moving back down, I actually think the AD line's hanging in there pretty strong. And so that's telling me why a lot of folks, while a lot of traders anyway, are selling their positions in biotechs, I think we got a lot of willing buyers out there. And that could bode very well for this group as we look further down the road. So what else is kind of interesting about the IBB? Well, if we go back to an hourly chart, notice that the last three, this is a 1-month chart, but notice the last three lows right here, and right here. And I want you to look at the hourly accumulation distribution. Here was the low. This low here, price was lower. AD line was higher. Came down one more time to a lower low. So that's 3 moves here. Had a low, a second low, and a third low. And here we had the AD line at a low, moving up, moving up. And in fact, on this last little bit of strength, these last couple of days, we moved up to a 1-month high on the accumulation distribution on the hourly chart. So we're already seeing that accumulation distribution on the daily chart. Here it is showing up on the hourly chart. And the hourly PPO is right at the center line. So I think tomorrow could be a big day for biotechs. If we can get that breakout above the recent high with the PPO on the hourly turning higher, that could be a very solid positive. The last chart I want to show you on the IBB, and this goes back 15 days, this is a 10-minute chart. And I want you to look here as prices went down, the AD line set a new low. We kind of recovered, AD line went sideways, we bounce, AD line recovers, and then we went down for about 6-7 straight days. As you can see, it's a pretty good channel. But the 10-minute accumulation distribution line never went back down to those prior lows, even though price action was way below. And now as we've turned back up just these last couple of days, look at the AD line on a 10-minute chart shooting higher. So I'm seeing this on the 10-minute, 15-day chart. I'm seeing it on an hourly 1-month chart, and I'm seeing it on a daily 1-year chart. All the same thing. The AD line's rising while prices are going lower. At the same time, weekly, on the weekly chart, we're seeing the IBB and we're seeing biotechs in general go back and test their rising 20-week EMA. So that makes me think that, hey, this could be an opportunity in this group. So I'm long the IBB, just full disclosure. I'm also long 2 stocks, Regeneron and Seattle Genetics. I actually just added Seattle Genetics this afternoon. And I'm going to show you Seattle Genetics on these same charts. So this is SGEN. And actually, before I even get into this, let's look at it on a relative strength basis. Because if you look at this chart, when it was up near its 52-week high here, relative strength, that was about the time it was setting its new high in terms of price action. So while the stock was going up, it was leading biotechs. The whole time biotechs have been moving down, Seattle Genetics has been going down with it, and even faster than the biotech group. It's actually lost some relative strength recently. But as I look, there was only one day we had a heavy volume, and look at that long tail. That's actually pretty positive action because there were a lot of buyers with heavy volume coming in after the stock sold off. The rest of this selling since then has been on much lighter volume. Now, as I look at Seattle Genetics, what I'm seeing is a move down in price for really the last 5 weeks. But notice the AD line is staying higher. Prices moved down quite a bit, and yet the AD line is staying higher. I think that is a positive here. Also, I would be watching relative strength on the stock Seattle Genetics relative to the biotech index. So right here, this low, we came up, put in this high, this low, pretty much an equal high here. I don't want to go back below this low on a relative basis. So even if the biotech start going up, if Seattle Genetics doesn't turn up on a relative basis, even if it's going up on an absolute basis, if we continue moving lower on a relative basis, I probably will get out because I want a leader. I don't want a stock that's lagging. I don't want a stock going up just because the index is going up and it's kind of being carried up by the index, because if the index turns back down, or even if it doesn't, Seattle Genetics may fall apart. So I'm going to watch these recent lows and also that relative strength line. But it goes beyond that. If we go in and look at Seattle Genetics here on this hourly chart, I'll see basically the same thing. I mean, we keep going lower last 7 days or so. Look at this move to the downside, 7-8 trading days. And look at the AD line going up. Kind of an interesting take on it. And then finally, if we look at this 10-minute chart and show Seattle Genetics on this one, notice as we were going lower, see the AD line going lower? We actually set a low here on August 21st. But as we kept going lower these last 3 days, we're seeing the AD line rising. I don't know, and I'm starting to see a little bit more volume these last few days. And with that AD line rising, it could be that market makers have built inventory. Maybe they've bought stock for their institutional clients. I'm not exactly sure what's going on here, but my read of all this is that biotechs could be poised for a move to the upside. And when I look at a stock like Seattle Genetics, if I'm wrong, I could go in and say, hey, here's the low at 153, here's the low at 152 and change. If we go back and close below 152, I'll just get out. I'm kind of looking at this as being a situation where I'm expecting Seattle Genetics to go higher from here now. And if it doesn't, I might just move right back to the sidelines. I'll kind of watch the action, see what's going on. But certainly if the volume were to pick up and we break down, I would quickly exit and not take any big chances. But I do think this is a point, a potential turning point where we could see Seattle Genetics making a big move. All right, how about the earnings spotlight? I'm going to talk a little bit about some of these companies that reported after the bell. First was Splunk. Splunk actually missed its estimate, came in at 33-cent loss. The market was expecting 32-cent loss. We got a breakout on the close today, but you can see it giving it back after the close. I think we're going to want to see if the gap support down here closer to about 203, 204, if that holds, down the road. I don't know what's going to happen tomorrow, but there aren't too many stocks in this space that missed estimates. I'm a little worried about that. I wouldn't own the stock because of that. I think there are way too many other software stocks that are blowing their numbers out of the water, and their charts look better. And so I actually like a lot of others much, much better than Splunk. So this will be a software stock to watch on Thursday for sure. How about Network Appliance? A big beat here. This is a stock that has not been very good for a while. And I was wondering if at some point it might begin to turn around. Maybe this earnings report is the catalyst. They came in 73 cents. The market was only expecting 40 cents. So a near double in terms of their earnings. Stock up almost 8% in after hours, back up over 45, challenging the high from August and also from July, which was up around that 46 area, a little above 46. So I think 45, 46 short term is going to be an issue. And then, of course, we got 49 to deal with, which was that June high. But this could be the start of Network Appliance. Normally, when a stock's been a major underperformer and it gaps up, I give it time. Normally, you don't just rush in because these types of stocks generally have a lot of sellers. So when you do get good news, you gap up. Normally, the sellers will jump back in. I think we'll probably be able to get this stock cheaper. And let's just see how it performs in the days and weeks to come after beating by this wide margin. ESTC. This was a stock that I featured over at Earnings Beats recently. And the stock came down, tested this prior support area, reversed back to the upside, and broke out ahead of its earnings report. They did come in and beat easily. Market was expecting an 18-cent loss, and the stock reported a 6-cent profit. So I'm not showing anything here at this point in terms of after hours. I'm going to check one other source real quick just to see if that is showing me anything. No, I'm showing it pretty much flat after hours. So maybe I'm not sure if that's the right quote, but that's the quote I'm getting on from two different sources. So something to at least consider. But the stock did report really nice results. A lot of that maybe is built in. We'll see if we get a pullback. I would think 100, anything down close to 100 would be great support if the stock were to sell off. Next up is Williams Sonoma. This is WSM. Pretty good beat here. Market was expecting 99 cents, came in at $1.80. Stock's down $5 after hours. I did not see anything except the headline earnings per share number. So maybe they've lowered their guidance. That's what I would expect given the fact that it's down 5% after hours. But the fact that they beat, I actually like that. And so a gap down, I think anything in the upper 80s, if it were to get that far, test the 50-day and all these tops, which now should provide some pretty good support, I would think that would be pretty good. I'm not even sure the gap down. We might see a big hollow candle tomorrow. But I'd need to take a look a little bit closer at exactly what they reported there. Another stock, SMTC, this is Semtech. They beat, but it was just by a penny. That almost seems like it's not enough these days. But they did come in 43 cents. Market was expecting 42 cents, and the stock is down 4.6% after hours. A possible pullback here to 60 would retest this recent low. I'd actually be paying more attention down here to about 57, to be honest. If we are literally going to see a pullback, I don't know that the 20-day holds. I think we could get back down to about that 57 area, closer to that 50-day moving average. All right, next up is Box Inc., ticker symbol BOX, BOX. Stock up more than 8% after hours. The expectation there was for 13 cents a share. Came in at 18 cents a share, and we got a nice little pop here at the end of the day on Wednesday, leading into its earnings report after the stock had been downtrending for the last, maybe 6-7 weeks. So that was maybe got it jump started a little bit after hours. This 8% pop's not going to hurt, and we are all the way back up close to 21. A breakout above about 22 and a quarter is what the stock really needs to get going. I think off of this uptrend with this earnings report, this could be the right side of a cup here. And then I think we might see a little pullback in the form of a handle before we make another push to the upside. Okay, looking ahead to Thursday morning, we got a few companies that will be reporting. So let's take a look at the companies that will be reporting, some of the larger ones. First up is Toronto Dominion Bank, and I'm going to pull these up on a relative strength basis so we can just see what what it's doing and what the market is telling us. Toronto Dominion Bank is one of the strongest banks. Look at this relative breakout here versus the bank index. So if you're a bank fan, you really want to see Toronto Dominion report well because they're one of the leaders. And as a leader, if this, if Toronto Dominion is leading and Wall Street saying, hey, this is a great bank, and they can't beat and they can't deliver the goods, then you've got to wonder about some of the others that are not nearly as strong on a relative basis. Dollar General reports in the morning. DG, nice breakout here heading into earnings. This is a specialty retailer. The group has been on fire. Dollar General, not so much on a relative basis, near a 52-week low, even though we got this breakout today. So this is a perfect example of why on an absolute chart, you might look at a stock like this and say, yeah, it's trending nicely. I want to own this stock. But then you look at a relative basis and it's way underperforming its specialty retail peers. So that tells me there are a lot of other specialty retailers to consider. DLTR, Dollar Tree. Dollar Tree, if you look at this one, also in that specialty retail space, moving higher and breaking out, but like Dollar General, on a relative basis, not exactly the strongest stock. So I'd have some reservations there. And the last one I wanted to point out is Burlington. Burlington, if you look at the apparel retails group, Burlington was one of the leaders back at the end of June. Right in here, we were still leading. But since then, we've seen apparel retailers move up. And from here, Burlington has not been able to move up, although it's been trying to hold on to a rising 20-day moving average, and the accumulation distribution turned up. So I'm seeing a mixed picture here. This could be the start of another move to the upside in terms of relative strength, but Burlington's got some more work to do. And we're going to find out with earnings whether or not it's ready to do that work now, or if maybe that's going to be further down the road. All right, let's wrap this up with the three you must see. I'm going to start off with I'm going to go with three companies that led the S&P 500 on Wednesday, starting with Salesforce.com. They are being added to the Dow Jones. Then they came out with an absolutely explosive earnings report, well ahead of estimates. Lots of folks jumping in here. This is a stock, I don't know that I would be chasing it, but I absolutely believe this is going to be an outperformer as we move forward. Next up, let's see, I've got Netflix. I recently talked about Netflix. I figured it was just a matter of time before we started to see catch up here, although I didn't think it was going to be in one day. Stock was up $57 today, 11.6%, back now near its high that was set back in the second week of July. Volume was huge. You can see the internet index is moving up. Relative strength, we definitely picked up today, but this has not been one of the strongest internet stocks. I think we could find other stocks like Facebook that would be much stronger on a relative basis. Still, Netflix, good day. And then the last one in that software space, got to mention Adobe. Adobe makes the breakout, accumulation distribution strong. Look at that volume. And on a relative basis, you got one of the leaders in Adobe versus software. So very, very strong stock here. All right, everybody have a great Thursday. That's it for me and Trading Places Live for today. We'll be back on Monday at Earnings Beats with your next Trading Places episode. Everybody have a great day on Thursday. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.